Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, Anthony Power and I are going to be dissecting some recent news that just came out in relation to Marathon, first and foremost, specifically their strategy shift towards a more vertically integrated business model. Secondly, we're going to be talking about some big updates from IREN Energy. And third, in today's discussion, we're going to be talking about the recent Bitcoin price and the resulting price of the Bitcoin mining stocks post ETF approval. So we've got a lot to go through. Before we get into it though, please take a second, hit the like button, you guys. It's a big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join. And let me know in the comment section below if you're currently holding shares of Marathon or IREN Energy, if you've taken advantage of the recent pullback to add some shares, and your outlook in terms of price target for 2024. Now with that being said, let's get into today's video. Okay guys, so that's right, you've got Anthony and I here today to talk about some big news out of Marathon and IREN Energy. In addition to that, we've started to see ETF money flow into the market. Unfortunately, the price of Bitcoin has pulled back considerably since the ETF launch, so we're going to be discussing that a little bit. Obviously, a big impact to the Bitcoin mining company as well, or Bitcoin mining stocks, but we'll talk about that a little closer to the end of today's video. First and foremost, Anthony, I wanted to get your take on Marathon. They just announced the closing of 2 new sites today. But I think the bigger discussion here is really around the strategy change at Marathon, as we're starting to see them kind of follow suit with a lot of the other miners and go into a more vertically integrated, self-sufficient model. So I'd like to get your thoughts on not only the closing acquisition of these sites, Anthony, but kind of that strategy as well.
Yeah, I mean, we first heard the news of these sites back towards the end of December. So the 19th of December, they announced they were purchasing the 2 sites. There's one site in Granbury, Texas, and a further site, Kearney in Nebraska. These 2 sites, add over 320 megawatts to their current position at the moment, and you go back 18 months ago, and Marathon they were clearly asset-light company. All their capital was being invested in mining machines, whereas other companies were investing in infrastructure, building on that infrastructure, and then using capital to build their exahash. Marathon built their exahash really quickly, and if you look at the sort of performance of the company, sort of for the last 18 months, 2 years. I'm not talking from the amount of Bitcoin monthly, because the last few months they've been producing significant amounts, and you'd expect that. But if you look at what they produce in terms of production by the machines they have in place, with the exception of a couple of months, it's been pretty insignificant compared to what some of their peers are doing. And when I say peer miners, I'm saying the likes of Bitfarms, the likes of Hive Digital, the likes of CleanSpark, the likes of IREN Energy. These companies own their sites. I mean, CleanSpark case, they do have a small hosting site, but most of their infrastructure is their own. But these 4 companies generally produce more Bitcoin compared to Marathon. December was the big change around from that, because we saw Marathon break literally every record that was on the table in December. And you can see that, their thought process over these last sort of probably 6 months in realization that, having infrastructure, having control, we've seen hosting fees increase in the last couple of years. So if we just take the pure energy cost and hosting fee, there was recent report, I think it was a JP Morgan report that came out last year that highlighted that Marathon had a hosting and energy fee of about 6.7 cents a kilowatt hour. And when we compare that to, say, TeraWulf, who've got a blended cost of about 3.5, Riot, who've got a cost of less than 4, some of the other miners, CleanSpark and IREN, that probably 4 to 5 cents. Marathon were paying a significant amount. What this new deal does for them is it starts to reduce that power cost. And they're expecting to be at the 4 cents a kilowatt hour with a site in Texas that will be optimal for, demand response programs, in the same way that the likes of Riot, the likes of Bitdeer, Argo blockchain, and Iris Energy are already receiving in that state when they curtail their energy during certain months of the year and get rewarded for that. So this is a good business move for Marathon. We highlighted this before, but this is now the sort of like the close of that deal. It's cost about 180 million in cash, and we know they've got significant amount of cash on the balance sheets. Their cash and Bitcoin holdings at the end of December were close to $1 billion. So buying this site now gives them an opportunity to continue their strategy of growth. So I think there's like 82 megawatts of the facility that they can grow into. There is a number of hosting companies on those sites at the moment, and once the hosting companies start to move in the future, Marathon will use that extra space to put their new mining machines in there. And I think we're in January now, and they've got the start of their next order arriving this month. So they put an order in 2023 for 7 exahash of miners, and the first tranche of those miners will arrive in January. So this has been a timely closure to that deal, and starts getting them well on their track to achieving 30 exahash, and they've got a goal of about 50 exahash come the end of 2024. I say a good deal for Marathon. They finally realised that there is some benefits having infrastructure, more control over their facilities when machines get switched on and switched off. Something that probably wasn't happening as much as they had hoped for as a host miner. But yeah, good deal all around.
Yeah, it's really interesting to watch this develop, especially as Texas seems to become kind of the epicenter in the world for Bitcoin mining. And you used this analogy in one of our previous podcasts, Anthony, but I think for most people it's fairly logical, right? You take better care of a home that you own versus a home that you rent, and apply that same philosophy to the infrastructure, and you can see why other companies are maybe able to squeeze a little bit more out of the infrastructure that they control. Now, I can already see, Anthony, we're going to get a lot of comments in this section about Marathon. We're not by any means saying this company has any flaws, you guys. They've done a great job of executing, building up their exahash and their capacity, and now they're just refining that a little bit, and we're seeing some joint venture activity. So as the industry evolves, Marathon is obviously evolving with it, and as Anthony said, a record-setting month in December for nearly every metric, and strong January as well from what I've seen so far. So that's the update on Marathon. You guys, let us know what you think in the comment section below. The next one, kind of exactly what we just talked about, is on the other side of the coin. Iris Energy investing in more machines. They've got an option contract here, opting for the T21s. So give us an update on kind of what the agreement or the press release said, Anthony, and then I want to talk about this difference we're seeing between the S21 versus the T21 orders right now.
Yeah, I mean, this is another good update by Iris today, and to be honest with you, it was expected. I mean, they're building out the Childress site, as we speak. 20 megawatts is already mining there at the moment. They've got buildings being installed as we speak, giving them an extra 80 megawatts. The site itself has power of about 600 megawatts. So they're not even when they finish what they're doing at the moment, that will only be literally about 16% of their available power. So, this new deal today, it's in two parts. So they've got an extra 1 exahash of purchasing the new machines, and they've chose to go for an option on a further 9 exahash, which has to be exercised in 2024, in the second half of 2024. If they do exercise that option, that'll take their exahash to 20 exahash. And we've talked about, a lot of these miners now trying to strive to a target, and that 20 exahash now is sort of now been achieved by a number of miners. So, obviously Marathon already above 20 exahash. Riot's already got an order, and that will get them 20 exahash when the first phase of Corsicana is up and running, and that starts from the end of Q1 2024. CleanSpark at at 20 exahash probably before the first half of 2024. They expect to go to 16 exahash in a number of weeks' time, and they have a further order of 4 exahash, which should get them to 20 exahash, and then a further order on top of that, which gets them to 32 exahash. Maybe if they can get the infrastructure by the end of the year, but they've certainly got the order in place for that, and options to go even higher. Bitfarms, another miner, also potentially they can get to 20 exahash as well with their recent order. That takes them to 17, and they have a potential to redeploy some mining machines that gets them to 21. So we're seeing a lot of these miners, you go back 18 months ago and they were looking to get to 3 or 4 exahash, and all of a sudden now these miners are looking to, double, treble, in sometimes quadruple their current hash rate to take part in this. And with the machine prices at the moment, it's become apparent that these prices that these miners are paying now, or notifying us what they're paying now, won't be available as we speak. I've seen other literature out there suggesting rates for some of these S21 T21s are heading towards $20, above $20 a terahash. So we saw in 2021 for some of the S19s, I know a couple of mining companies that paid in excess of $80 a terahash. And here we are now, even with the Bitcoin price today, over 40,000 miners are paying, or have been paying in the last few months, considerably less than that. But that price will rise as the Bitcoin price rises. We know the machine price rises because there is a correlation to that. So these miners have got in there and got some big orders in, some big options for further orders. And Iris Energy have got a site to fill those miners. They could fill that order 4 or 5 times at the Childress site. And they've even got plans on having another site on top of Childress. So, it was expected to get another order, and I think that'll please a lot of the shareholders. Just 1 exahash of purchase, but that 9 exahash of options to be exercised, in the second half of 2024, as we see the Childress site expand, is a good move for them. And it's what the market wanted. Yeah, good update.
Yeah, and you talk about pricing. So I believe Iris was able to get these at $14 a terahash. And it's really interesting to see Bitmain's pricing schedule or forecast, I guess, because they've actually undercut their S19 model. So the T21, you guys, it's about 19 joules per terahash, I believe, in terms of efficiency. So it does beat out the S19, but they've undercut the price so much that they're really, I think, doing a market grab or market share grab right now compared to some of the other hardware manufacturers. The other thing that's interesting is we've seen a real divergence. Some companies are going the T21 route, some companies are going the S21 route. So from my understanding, Anthony, out of the box, the S19 is more, or sorry, the S21 is more efficient, but there are some differences with the T21 enabling kind of an overclocking ability and some warranty differences. So we'll see, I guess time will tell which of these two machines proves out to be the better, but it is interesting to see as companies announce these purchase orders, these option purchase orders, which are becoming very prevalent, which of the two models that they go for right now. And I would assume, as you say, Anthony, we'll start to see the price for units go up as we move into halving. So great that companies are able to get these rock bottom prices right now.
Yeah, just to add to that, Bryce, I mean, that's a good point. I mean, the T21 gives the user the opportunity to overclock, and the overclocking is allowed in the warranty. So that's a big difference. Before, miners, where you changed, the functionality of the machine to overclock, you didn't get the warranty then if you start playing with it, but they actually give you a button to actually do that actual facility. The key thing, though, with buying these miners is really the cost of energy. So if you compare an S21 T21 to an S19, you're looking at like half the energy to mine Bitcoin. So we've talked about when we get to that halving and it takes twice as long to mine, you better have the lowest energy costs. So Marathon's update there, going in for that infrastructure, getting down to 4 cents a kilowatt hour. That's a massive drop on 6.7, what they were paying, in their previous updates, highlighted by JP Morgan and other analyst companies out there, to getting down to 4 cents, and then now having, if they get the most efficient mining machines in place, these companies paying half the price to mine that their competitors are paying, it's a good thing all round then. So you're going to need that going into the halving, because you're going to have to try and reduce what you can do, and having more efficient miners. And we talked about Iris. I mean, Iris, I've got a quite efficient fleet at the moment. They had most of them S19s. This new order can take their efficiency down to less than 20 joules per terahash, which is like tier one, in terms of performance wise, in the peers. A lot of miners at the moment, the top end of miners is 24, 25 with the marathons and the CleanSparks. Riot also close to that figure. But these big orders of miners will drop that number lower than 20 for a lot of the big players who have got in their big orders. So we're seeing a sort of a divide at the moment. We're seeing 5 or 6 of the miners now getting towards that 20 and above 20, and then we're seeing some of the sort of like the smaller miners who are trying to double their size at the moment, from say 1 exahash to 2 exahash, or 3 exahash to 6 exahash, or 4 exahash to 8 exahash. There's a sort of like that in terms of growth, it's sort of being left behind. Everything will be dependent on the halving and what the Bitcoin price does, because if the Bitcoin price doesn't rise after the halving, and these miners, and not just these miners, global miners out there, realizing that the profitability is not there, you might see a lot more turning off. And therefore, the most efficient miners, those miners who've got the best energy rates, will be able to continue mining and benefit from the fact that difficulty will start decreasing as unprofitable miners get switched off. So we keep emphasizing this, but it's a very good point to emphasize. The stronger miners, effectively, who get the best energy rates, who get the best efficiency, can potentially be the winners in this game. And we're seeing this now from some of these big North American mining companies.
Yeah, we sure are. Now, speaking of Bitcoin price going into halving, Anthony, the last thing I wanted to address here, I think a lot of people are kind of scratching their heads about this one, is the Bitcoin price we've seen post-halving. So myself included, guilty as charged here, you guys. I was kind of thinking, hey, you know what? Obviously, we're going to have an influx of new capital. We're going to have more attention, more interest in Bitcoin. Generally, that should be seen as higher demand. Supply is consistent and now restricted in April, or cut in half. So if you've got increased demand, equal or reducing supply, obviously price should increase. Now, if it were only that easy, Anthony, we'd all be millionaires. There's obviously been another school of thought that, hey, this is a sell the news event. People have been building these positions. Now they're taking profit. There's short selling activity. There's all types of different market dynamics. But I think generally for most of us who are invested in these miners, a pretty disappointing start to the ETF world we now live in. However, I've been seeing and reading a lot more about how the ETF funds are settled, and some of the delays and next day purchases. So I do think it will take a little time to flush through. Obviously not selling and haven't hit the panic button yet. But Anthony, I'm curious to get your thoughts. I know a lot of viewers have really said, what gives here, you guys? Why is Bitcoin and the Bitcoin miners not moving up as we expected here?
Yeah, there's so many moving parts to that question. For me personally, I still think the market doesn't quite know how to value the mining companies themselves. So we see some vast differences in market capitalization and enterprise value across some of these miners. And I put tables out there highlighting this, and people automatically think I'm actually against miners. It's not. I'm just telling you the facts, the black and white of what they are. The ETF, yes, there was a lot of expectation that would rally the Bitcoin price, that would rally the mining price, and the micro strategies of this world, and the Galaxy Digital of this world, and the Coinbase of this world, all these proxy investments for Bitcoin itself. But remembering that the Bitcoin price did grow 160% in 2023, and so if people just expecting year after year 160%, then probably that may be a little bit too optimistic. Let's look at, previous cycles. We've not seen the Bitcoin price rally to say 4 or 5 months after the halving. And so that's why you see these mining companies now going in there, trying to get the best energy deals, trying to get the best machines, more efficient machines, having that cash runway. And that's important. It's not just having machines and energy prices, you can't afford to pay for them. So, we've seen the big miners articulate in their updates how much cash they've got available. And, that gives them a longer runway. So Riot at the moment, we don't talk a great deal about Riot, in terms of some of their recent months in terms of production. But what we can say is, from a cash runway, they've probably got longer to last than any other miner. They've got a significant war chest of cash on their treasury. They've got a reasonably good level of Bitcoin as well, nearly half the amount of Marathon Digital, but it's a good amount to have there. And they've got probably 4 or 5 years of runway, so then they're not probably having the same sleepless nights as they're going to the halving as, say, some of the other miners. But cash is important, it really is. Marathon have shown that they've got a cash windfall, albeit they've just spent 200 million this week finalising that deal for those 2 sites. But they can see the benefits of that, and they've still got probably 800 million of treasury available. So they've got a long way to go, and we'll see another big order come through from them to start being ready for filling the space that they have at these new sites as and when it becomes available. So there's 82 megawatts now. We've got some new machines coming in this month and for the next few months in their tranche to get to 30 exahash. But you'll see them with their sites on 50. You'll see another order coming in, and I imagine it'd be sooner than later, because the prices will start to rise. I don't know what the Bitcoin price will do post the halving. I mean, I've said that quite clearly. I don't give recommendations on price. What I'd expect, though, within a few months of the halving, we'll start to see some pickup there. The other factor is fees. Fees played an important part in December, worked about 20% of the actual Bitcoin value. So that was a really good month for fees. Do fees continue to play a part in this? There's a lot of experts out there saying that, the miners, if it becomes unprofitable to mine, then fees might increase. There'll be some way that this gets rectified and miners then start benefiting, from a fee perspective rather than a Bitcoin price perspective. I mean, they are obviously inextricably linked, but it means that, rather than, achieving 6.5 Bitcoin at the moment, or 3.125, 6.25 at the moment, or 3.125 post the halving, with their fees, that 3.125 could be 4.5 Bitcoin per block. So, that's potentially, how things can be settled that way. Mining stocks, I mean, we talked about mining stocks in 2023. Mining stocks raised, some of them raised 500%, 600%, 700%. So, yes, there's been a bit of a pullback in January. We've seen stocks pull back 20-25% over the last week or so, like that. But they rose significantly in 2023, and we've talked about the volatility of this particular sector. So, if you'd have sold some shares on December the 29th, or literally the day before the announcement for the ETF, you'd have been sitting probably pretty on some nice profits. But there'll be the Bitcoin price will, if it keeps rising, we'll highlight that in the accounts. These mining machines will be showing greater margins than they previously produced, and therefore they'll start becoming attractive again. So, we talked about whether people want to shift investment to the ETFs. I think there's still space for the mining companies out there. I know that the mining companies themselves are very bullish. We're seeing that. They wouldn't be placing all these orders if they weren't bullish. They've got an incentive for their own companies to do well, because they benefit from that, and so when they make decisions, they're making decisions based on what's good for the company. Otherwise, they don't benefit in the long term. But lots of moving parts. But I think I think if people are expecting 100% rise every week, you're not going to see that. You have to accept there's some volatility. I think the Bitcoin price has been fairly stable last few days, actually, which is a good sign. It might be looking at where the next move is going to be from that there. But I don't do technical analysis. I can't give a prediction. What it's going to be in 10 minutes time. Never mind what's going to be tomorrow or at the halving day. But looking at previous cycles, there would be an expectation that 3, 4, 5 months after the halving, you'd expect the Bitcoin price to catch up to where it should be, so that mining companies can produce it as a profitable industry.
Yeah, I'm really glad you brought that up, Anthony, because that's another big debate right now is with the ETFs. Are people going to pull money from these proxy investments and put it directly in the ETF? And I saw a really interesting counter opinion there saying, well, holding Bitcoin's great, the ETFs are great, but they don't throw off cash flow. They don't have revenues. They don't pay dividends, which we've heard a lot of the miners wanting to get into. So another good discussion maybe that we can open up in another podcast, but a lot going on to say the least. And I think the best thing to do right now, guys, is just give it a little bit of time and let everything shake out. One funny thing I was going to say there, Anthony, we talked in a prior podcast about exit strategies. And Anthony and I spend a lot of time in the Patreon and stuff talking about that. And the one that seems to be the best for me, Anthony, is when I'm taking screenshots of my account and sending it to my friends saying, look how much money I'm making. Those are the days I should be selling, and the days I don't want to log into my account are the ones I should be buying. But the old buy low, sell high, it's the easiest thing to learn or say, but it's the hardest thing to actually do in reality. So appreciate your comments there. You guys, thanks so much for watching. If you're still enjoying the program, hopefully you found some value. Hit the like button. Get this content to other people who may find value. If you're not subscribed to the channel, McNallie Money, feel free to join. We've got Anthony's Twitter or X and Patreon linked below. Go into the comments. Let us know what you think about the news from Iris, Marathon, the Bitcoin mining price right now, or Bitcoin mining stock share prices, and we'll see you in the next update.